Ever wondered who actually runs this country? No, I'm not talking about Parliament House or the latest political drama. I'm talking about the quiet giants, the corporate behemoths whose operations touch every single aspect of your daily life, often without you even realizing it. We're talking about an Aussie company that astonishingly rakes in more than $90 billion a year. Think about that for a second. That's a mind-boggling $250 million flowing into their coffers every single sunrise, long before you've even had your first sip of that flat white. Who are these colossal entities? How did they manage to grow so incredibly massive? And more importantly, which other titans are subtly yet powerfully tugging the strings of your wallet, shaping your retirement, and even dictating the price of your weekly groceries? Stick around, because today we're pulling back the curtain and counting down the 5 companies that truly run this country. All right, let's not keep you in suspense any longer. The undisputed revenue king, the one that recently crossed that staggering $90 billion mark, is none other than Rio Tinto. Yeah, the diggers in high-vis vests and hard hats. For the 2024 financial year, this mining powerhouse reported a colossal revenue of approximately $81.22 billion, a figure that, while slightly down from the previous year, still firmly plants them at the top of the heap. And get this, their net profit still managed to climb, hitting $11.6 billion, a healthy 14% rise from the year before. This isn't just squeaking past rivals like BHP, it's leaving the banks in a cloud of red dust, proving that sometimes the real treasure isn't in vaults, but deep within the earth. To truly grasp the scale of $81.22 billion, let's put it into perspective. It's more than the entire gross domestic product of a nation like Iceland. It's roughly equivalent to what the federal government spends on critical services like Medicare, the National Disability Insurance Scheme, NDIS, and public schools combined. Imagine that. One single company generating that much economic activity. Rio's money cannon isn't just firing, it's practically a superweapon of global commerce. It's powered by endless iron ore trains, some stretching for kilometers, longer than entire city central business districts snaking across the Pilbara. It's fueled by aluminum smelters that glow with an almost otherworldly intensity, resembling mini suns, churning out materials essential for everything from aeroplanes to your smartphone. And let's not forget the vast copper mines, feeding the insatiable demand of the electric vehicle boom and the green energy transition. This isn't just about digging, it's about supplying the fundamental building blocks of modern civilization. But here's the kicker, the delicate dance of global economics. When China, the world's biggest consumer of raw materials, so much as sneezes, Rio Tinto catches a cold. And when Rio Tinto catches a cold, your superannuation fund feels it. Most Aussies haven't directly bought a single Rio Tinto share, right? Yet almost every balanced superannuation option out there has a significant chunk, typically between 4 and 8%, tied directly to the big red R. So when iron ore prices spike on global markets, your retirement balance gets a cheeky, unexpected top-up. But when those prices tank, your annual statement arrives with a distinct frown, a stark reminder of the interconnectedness of your financial future with distant global markets. Here's an interesting tidbit that really hammers home their dominance. Rio Tinto's most profitable asset isn't some complex refinery or high-tech facility, it's a single mine, Pilbara's Hope Downs 4. That one gaping hole in the middle of nowhere throws off more profit than entire publicly listed companies like Qantas, JB Hi-Fi, and AGL stitched together. Just one pit, an economic entity larger than most ASX 200 companies. It's a testament to the raw, unadulterated power of commodity extraction on a global scale. Next up, the venerable, almost institutional BHP Group. If Rio Tinto is the flashy, high-octane performer, BHP is the reliable older sibling, equally powerful, perhaps a touch more diversified, and definitely steadier. For the 2024 financial year, BHP reported an impressive revenue of $84.24 billion or $55.7 billion in operating income, a solid increase from the previous year. And their underlying attributable profit for FY24 was $13.66 billion, showing a consistent, strong performance. With a market capitalization typically hovering around $230 billion, it consistently ranks as one of the most valuable stocks on the ASX. They might deal in the same dirt, but their dividend payments are often seen as a bedrock of stability for many investors. BHP's portfolio is a global smorgasbord of essential resources. They've got oil, of course, the lifeblood of transport, copper, crucial for wiring our modern world, metallurgical coal, essential for steelmaking, and even potash in Canada, feeding the world's agricultural needs. But just like Rio, the undisputed cash cow remains the vast iron ore deposits of Western Australia. The sheer scale of their operations is staggering, driving a significant portion of Australia's export revenue and contributing substantially to the national GDP. Think about it, every household indirectly pays BHP twice over. Once, every time you fill up your car, thanks to their petroleum interests, and again, subtly, through the 6 to 10% weighting that BHP commands in almost every broad market ETF you might own in your super or personal investment portfolio. They are woven into the very fabric of Australia's economic landscape. Now for truly a fascinating information nugget. BHP's Olympic Dam operation in South Australia isn't just a copper mine. It contains one of the world's largest uranium deposits. It's an underground behemoth with over 700 kilometers of tunnels extracting copper, gold, silver, and uranium. While copper typically accounts for the majority of the mine's revenue, about 25% comes from uranium. They barely scratch the surface of its uranium potential. Why? Because frankly, iron ore is often easier money, requiring less complex processing and facing fewer regulatory hurdles. But imagine the strategic leverage. If global uranium prices were to quadruple, a scenario not entirely out of the realm of possibility given the renewed interest in nuclear energy, BHP could flick a switch and become a quasi-nuclear fuel supplier on a massive scale. That incredible optionality, that latent power, is already baked into the share price you see scrolling across the nightly news ticker. It's a silent promise of future potential residing beneath the arid plains of South Australia. Moving from the Earth's bounty to the flow of capital, we arrive at the Commonwealth Bank of Australia, or CBA. Their reported revenue for FY 2024 was around $27.30 billion or $27.174 billion in operating income. Now that might seem modest compared to the mining giants, but here's the kicker, the truly astonishing part. Their cash net profit after tax for FY 2024 was a staggering $9.836 billion. That's a profit margin that Rio Tinto, for all its colossal revenue, can only dream of. CBA isn't just a bank. It's basically a money printing press, albeit one with a highly sophisticated app. CBA's reach is pervasive. They don't just have their iconic yellow branches, they own Bankwest, a significant player in Western Australia, and Aussie Home Loans, one of the country's most recognizable mortgage brokers. They even hold a 25% stake in the real estate site Domain, ensuring they're connected to your property journey from start to finish. It's no exaggeration to say that roughly 1 in 3 home loans in Australia is stamped with CBA's approval. They are the financial backbone of the Australian dream of home ownership. And here's where their power truly manifests in your everyday life. When the Reserve Bank of Australia, RBA, lifts interest rates, CBA's net interest margin, essentially the difference between what they pay you for deposits and what they charge you for loans, widens, often within a mere 90 days. Your increased mortgage payments? A significant portion of that gets rerouted directly to CBA shareholders. Their dividend reinvestment plan has, over the years, quietly created more millionaire teachers and nurses than any lottery ticket ever could. It's a powerful, almost automatic wealth-generating mechanism. Random tidbit that really hammers home their dominance? CBA's banking app records an astonishing 13 million logins per week. Think about that. That's more than double the entire population of New Zealand engaging with one bank's digital platform every 7 days. This isn't just about transactions, it's about data.
As the saying goes, data is the new gold, and CBA, with its unparalleled digital engagement and deep insights into millions of Australians' financial habits, definitely has the mother lode. They know where your money comes from, where it goes, and how you spend it, making them incredibly powerful players in the digital economy. Next, we turn to the National Australia Bank, or NAB. For the 2024 financial year, NAB clocked in a total revenue of $62.186 billion. That's a higher revenue figure than CBA, but their cash earnings were slimmer, coming in at $7.102 billion, an 8.1% fall from the previous year. Why the difference? NAB's strategic focus is heavily weighted towards business banking. When cafes, tradies, small businesses, and burgeoning startups need cash to grow, expand, or simply keep the lights on, NAB is often the first port of call. They proudly hold about a 30% market share of lending to small and medium businesses and nearly 24% of total business lending, making them the acknowledged leader in this crucial sector. On the surface, that sounds incredibly noble, a bank supporting the engine room of the economy. And it is, to a degree, but it also means they shoulder significantly more bad debt risk. Businesses, especially small ones, can be volatile. Economic downturns, shifts in consumer behavior, or even just a bad season can lead to insolvencies. We saw this starkly in 2020 amidst the initial shocks of the pandemic, when NAB copped a massive $2.2 billion impairment charge. That's money set aside for loans unlikely to be repaid. Rio Tinto, with its mountains of iron ore and global contracts, never has to worry about a cafe owner going bust. This difference in risk appetite and business model is fundamental to understanding the varying profit margins among the big banks. NAB's secret sauce, for a while, was its UK digital bank, Clydesdale Yorkshire. While they've since floated it off, NAB still manages to milk it for fees and maintain a strategic connection. It was a bold move into international digital banking that paid dividends and diversified their revenue streams. And here's a quirky side note, a glimpse into the meticulous world of corporate branding. NAB's distinctive red branding wasn't chosen by accident. Oh no, it was the result of extensive color psychology tests, which apparently showed that the color red makes customers feel their money is safe and action-oriented. Sometimes marketing departments get paid a lot of money to state what, in hindsight, seems almost comically obvious. But hey, if it works, right? Finally, let's talk about the company that probably interacts with you more frequently than any other on this list, Woolworths Group. For the 2024 financial year, Woolworths reported total sales, revenue, of $67.92 billion. That's $46.09 US, a solid increase from the previous year. However, their profit margins are often thinner than your morning shave. For FY24, their net profit after tax plunged dramatically to $108 million due to significant impairments related to their New Zealand food business. But even excluding these one-off charges, their underlying profits still saw a slight dip to $1.7 billion. Woolworths isn't just about those familiar green and white supermarkets, though they operate over 1,200 of them across Australia and New Zealand. Their empire extends far beyond the grocery aisles. They own Big W, the discount department store, offering everything from apparel to electronics. They ventured into pet care with Pet Culture, a joint venture that combines online retail for pet products and services with pet insurance. And they hold a substantial 50% stake in PFD Food Services, a major player in the food distribution to businesses, further cementing their control over the food supply chain. They are a retail ecosystem. Here's where it gets really interesting and perhaps a little unsettling. Every single time you swipe your everyday rewards card, Woolworth's sophisticated algorithms are not just giving you points, they're algorithmically pricing your next shop. The data flywheel spins so fast, collecting insights on your purchasing habits, preferences, and even your brand loyalties, that suppliers now pay hefty slotting fees just for the privilege of having their products breathe on Woolworth's shelf space. It's a powerful testament to the value of retail data and market dominance. Fun fact to illustrate their sheer scale: if Woolworths were a country, its annual grocery sales alone would rank just below the GDP of Sri Lanka. That's how much food and goods they move. And because they effectively operate as a duopoly with Coles in Australia's grocery market, the Australian Competition and Consumer Commission, or ACCC, watches them like a hawk, constantly scrutinizing their pricing and market behavior to ensure fair play, or at least as fair as possible in such a concentrated market. Still, despite the occasional grumble about prices, most of us stroll in weekly, swipe our cards, fill our trolleys, and repeat the cycle. They are an inescapable part of Australian life.
So, there you have it. 5 firms, 5 titans of Australian industry. Together, these 5 companies alone account for an astonishing 1/3 of the entire ASX 200's total market value. The sectors they dominate, mining, banking, and supermarkets, really aren't a surprise, are they? These are the foundational pillars of any modern economy. But the sheer concentration of power and influence in just a handful of boardrooms is frankly wild. So, after hearing about these colossal Australian companies, which of these titans shocks you the most? Did you ever imagine a bank could beat a global mining giant in net profit margin? Or that a supermarket chain's sales could rival the GDP of a small country? Drop your thoughts, your surprises, or even your frustrations down in the comments below. And if you want more deep dives into the fascinating, sometimes hidden world of Aussie money and power, smash that subscribe button. And hey, next time you grumble about grocery prices or the relentless climb of mortgage rates, remember the multi-billion-dollar elephants in the room.